Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Obviously, isn't earn. Whoa, that scared the crap out of me. Jason just yelled as he walked into the office. It's an earnings day. All right, we got 340 earnings reports between yesterday's afternoon session and this morning's pre-market session. So a lot on the earnings front to get to. We're going to talk tech stocks by and large because that's the theme of the day. We're going to talk. We do have a real estate merger. I want to hit on that as well. We got a couple of biotech headlines. If we have time, we'll get to those. If we have time, we'll get to questions from our chat. Two guests on today: Marc Chaikin at 8:15, Peter Tuchman at 9. Before I throw it to Joel, the goal for the day is to get 1,000 likes. If we can do that, I have a special announcement about tomorrow afternoon. Joel and I potentially have a special show planned, but only if we can get to 1,000 likes today.
That was going to be the break. I was going to have you do that as breaking news at the top of the show, but I
don't even want to do it unless we can get to 1,000 likes. All right, so it's in the works, but it's a surprise, and we're not doing it unless we get to 1,000 likes. So hit the like button if you haven't already. And now
I'll hit the like button.
Thank you, Joel. How are we doing this morning? I see we're up.
Oh, Spencer. The triple close. It never gave you a chance to buy the triple close at 79, 79 and a half. Just straight up. Opened 84.75. They like those earnings reports. Already in the 4,200 handle, 07.75. That's your target on the upside. Has some other targets, but I don't want you guys to get nosebleeds here and nose. Crude, that's up 92 cents at 64.78. Gold's up $2, 17.75.90. Silver, that's in the green by 32.2 cents at 26.44. And Bitcoin doing the old mid 50,000 handle stall. That's down $1,155 at 54,140.
Joel, Dennis, how you doing today?
I'm doing. It's one of those days. It's kind of mixed results here. I got some good ones and I got some bad ones, and I'm trying to work out of stuff. So it's an interesting morning. Sometimes in trading, you get these boring mornings, and sometimes you get these bad mornings, and sometimes you get these interesting mornings. This one's interesting. Lots of stocks still to be determined direction. Anticipating some rotation out of tech, but that was happening last night. And then Biden's speech, you're starting to see the rotation into tech, or not out of tech. I'm sorry. I was anticipating some rotation out of the non-tech because of the big Facebook Apple earnings. But with Biden's speech, that's actually moving up the non-tech. So you have the tale of two markets here going on, at least two catalysts, good tech earnings and then Biden. And it's actually equaling an everything up day. So, which I did not anticipate everything being up here today. I guess with Biden speaking as bullish as he was on the economy, as bullish as he was on jobs, as bullish as he was with going to spend, I guess it's not surprising that they're buying stocks hand over fist this morning.
Yeah,
That's just the way. I mean, there's no other way to put it. I mean, I was listening, watching this, and it just everything that came out. I mean, every trick he'd pull it out. I mean, very optimistic. I haven't heard a more bullish speech coming out of a president, and I don't know, since Abraham Lincoln.
Well, I mean, that's going with because
Yeah,
they're always bullish.
that was pretty bullish.
Yeah, they're but I mean, it's just you've got the Fed, which says yesterday that they're just going to print money forever.
Yeah.
Obviously, you know, we know that inflation is here, but they don't even give a crap that inflation is here. They're still not going to raise rates. They're still not even going to, slow the buying. And then you have Biden, the same thing, spend. It's the economy that literally does not care how big the deficit gets.
Nope.
That's what it is. And, your grandchildren are all going to, well, I don't know if anybody's ever going to pay for any of this because the hole's so deep now. I mean, we're 28 or 29 trillion or whatever the hell it is. I mean, there's no way out ever. So I guess, at this point in time, you just keep printing money. I mean, it's basically a big Ponzi scheme is really what it is. I mean, we just keep printing money and pay people, pay whoever wants their money back with other people's money. I mean, that's really what it's come down to. It's a huge Ponzi scheme.
It's Pumpin' Powell.
Pumpin' Powell. Ponzi Powell. Why don't we call him Ponzi Powell? Really what it is.
Man, tell us how you really feel.
There's no way. I mean, it doesn't make any, it makes perfect sense, I guess, when nobody cares about, where the deficit goes. Why not just keep spending? Enjoy the good times. YOLO, man. This is the YOLO Fed. You only live once. Let's spend everybody else's money. You only live once.
We're in the YOLO economy.
Yeah, it is totally. It's built on debt. And the debt that's never going to ever get paid off. There's no way to ever pay it off. Interest rates can never go up because they couldn't service the debt. So they got to keep the interest rates low despite whatever happens with inflation. So, I mean, inflation could just run rampant. They'll use excuses, whatever they can, or just choose not to measure it. But, what does that mean? I mean, you've got to own assets. And, cash has been trashed for a long time because it's getting worth less and less every day. You can see, now it's gone into food. They had a special on CNBC 2 days ago. Loaf of bread's up 15% year over year. They're telling us inflation's 2%, but the loaf of bread, which everybody has to eat, up 15% last year. And there was other, corn. We know what the
these charts. I mean, these.
Yeah, you show corn, you show wheat, you show any commodity. I mean, it's
corn.
Gone.
Look at corn.
They're gone.
$6.72 a bushel. Beans in the teens. Here we are. That had like 14
inflation
straight
everywhere.
days.
Joel, we have to get Angie on the show.
I know. I was thinking about that.
I have a news alert, but I can come back.
Whoa, look who just came in.
Wait, Jason just popped in. What's going on?
This is a quick news alert. But my wife does say that there's too many beans in the house. That's for sure, Joel. So anyway, but besides that, your friend Donald Trump was just on Mornings with Maria. We may be able to get Donald Trump on the pre-market prep show. Are you guys interested or not?
Yes.
Not today, but next week. Do you guys want it? He just finished on Maria. He was controversial, but would you guys take Trump on?
Yeah, we take Trump on. Yeah, we would. All right. Interesting.
I got an interesting text from a friend that said if we want, he can potentially make it happen. I just don't know.
Imagine?
So,
all right, that's all I wanted to tell you guys. He was just on Mornings with Maria ripping on Biden for his thing yesterday. That's my morning alert. And by the way, Spencer, you got a big news update to give. There is so much stuff moving. The market was kind of dull for me for the last few weeks, guys. This morning, whoa, there's acquisitions or stuff. I'll leave you guys alone so I know you have a show, but I had to tell you about the Donald Trump thing. Okay? Peace.
All right.
A lot of people saying they don't want him. We're not a political show here, but I mean, it's an interview, and I mean, it'd be very interesting. Whether you're a Donald Trump fan or not a Donald Trump fan, it's just interesting. I mean, how interesting would it be to talk to Donald Trump? And you guys could throw questions to him.
The closest I came to asking him a question was when they had the debate in Detroit back when he was running. And I went with Benzinga, and I was in the spin room after, and I was one of the people with my mic, my phone, my recorder, just like in his face, but I didn't actually get a question in. Which we
might be able to get a question if he comes on our show. That'd be
maybe.
pretty cool.
Okay, can we go to earnings here?
I'd actually be kind of nervous, I think.
Dennis, you're never nervous.
I might be on interviewing Donald Trump.
Do we have that picture that Emily took at
we have many of those pictures, Joel.
She got one. I don't know how she wiggled her way up there, but let's see if I can find it. But anyways, what do we got? What do we have?
We have 300 companies that have reported.
We're talking about Donald Trump.
So we could do a company every second here, or every 5 seconds, and try to cover them all. You want to do that?
Well, we're going to try. Let's start with Apple. You can see the headlines from last night in the Benzinga Pro. Huge beat. EPS. Huge beat. Sales beat. Every segment beat. iPhone, Macs had their best quarter ever. Services beat. iPad sales beat. All of it was good. Wearables was good. It was all good. China sales are good. Demand is up. Everything was good. Oh, they're also adding to their buyback.
$90 billion to their buyback. It's a huge move for Apple, but you know what? It's been leaking nonstop since after hours, since last night. If you bring up that after hours chart, all the big, noise off the third candle there, you can see the explosion from 137 to 139 when the buyback's announced. And it's kind of leaked back, not all of it, but we've given back almost half the gains, which is somewhat concerning. I'm long Apple, long term, not concerned at all. Just saying from a trading perspective, it's holding up here. I'd say you don't want to see this starting down at below 136, because then you start thinking, it might give it all back. So, but it's a big mark. It's a big move for a big company.
It blasted. We talked about 135.5. That was a great level. It just major resistance, and it just took it out. I thought you might see 140 on this run, a nice round number like that. You didn't quite get it. Where did you get to? You got to 139 and change. So that's going to be a tough target. I agree with you. It's thickening it up. 139.50 is the after hours high. It's just settling in here. And now your 135.5 is support, right? Old resistance, new support. That's even not quite the top of yesterday's range. So it's leaking. I think you're going to have a Microsoft kind of day. Throw out the high, throw out the low, and just grind here, and that's what it's doing. I think
probably.
I think you kind of
where it wants to be.
Yep. I think you kind of. I mean, Microsoft, after all that craziness in the after out, never got near my resistance level, and never got near my support level. So that's what I think is going to happen in Apple today.
It's kind of a good point. Like you can say, we're not saying Mike is going to tank $10. We're just saying it's. All the price discovery has already happened, and it's kind of where it wants to be. So I don't know if it's going to make new lows. I don't know if it makes new highs. I think I agree with you, Joel. I think kind of the range is in.
All right. Yep. Thanks to Jason for just derailing our chat for the day.
Yeah, the chat is either very happy or very upset. There's actually no in between. Because we know with Trump, you like him or you don't like him, and there is absolutely no in between because every single person has an opinion on him. That's Hurricane Raznik for you. It comes in.
the
chat. Half the people are unsubscribing, and half the people love it.
Yeah,
which is exactly where the vote went.
We didn't even
a little bit more to Biden.
We didn't even do anything. Jason just.
Some people are really mad. They're mad at me that I said I would take him on the show.
Oh my God. Okay.
Yeah, I'll tell you right now. I'll let y'all do it.
You're not going to say on interview?
No, I'm not going to do that. No.
All right. Okay. I'm bringing.
They all love. Now half the chat loves Joel, and the other half hates Dennis.
I'll support you, Joel. I got your back, man.
Oh my God.
You're not going to do it either?
I won't be a part of that one.
Jesus Christ.
It's going to be interesting.
I'm bringing it back. We're bringing
Spencer. Spencer will stay. He'll do the interview.
I would think about it. How about that?
Oh my goodness!
I'm not a no. I didn't say
I have to do Trump by me and Raz will do it.
I didn't say no. I didn't say no. I said I would think about it.
All right. Well, it's
That
an
is
interview. It's not a let's bring Trump back as president. It's an interview.
I am
All right.
apolitical.
Oh man. Okay, real quick.
All right.
Wait, real fast. That was Apple. What about Facebook here? Same story. You kind of knew it was coming because the Google quarter was good as well. And there's a headline from last night. EPS beat, sales beat, daily active users beat. They raised the low end of their guidance for the year.
Wow, man.
I would expect at some point, there's gonna have to be some sort of a guidance cut as it relates to advertising, because Apple just rolled out their new privacy feature that lets you basically opt out of tracking, and that's what Facebook relies on. But we're not there yet, it seems like, because everything seems good right now.
I wish I was long in this stock. I was long it. I sold it. I sold it back during COVID crisis because I thought the world was imploding. So actually, I believe I sold it even before the COVID crisis. It did implode. I never rebought the stock. Major mistake. It's been cheap. It continues to remain cheap. When you back out the cash, stock's cheap. So, I mean, that's, where we've moved into value. It's value tech. So it's still cheap even at $331 from a valuation perspective compared to some of this other stuff. I mean, it's right in the ballpark. I mean, what are we trading? 25 times forward earnings, 22, 23? If you back out the cash, it's not expensive. So pullback still to be bought on Facebook. I like Facebook. I like Google. Facebook's basically one of the only ones that I don't own. Luckily, I have a lot of Qs and SPY, so I guess I own it indirectly through there.
You feel like it. You feel like
you probably do have a piece through there.
Yeah,
but,
tagging along, right?
Yeah. I wish I owned it directly, though.
What?
I did.
What? I mean, I wrote this a while ago. Institutions backed up the truck here, right? And then when I did this article, you made these highs, and I'm like, there's no institutions looking to get out at 290. And there's no institutions looking to get out right now. 331.90. And we're probably bid, Dennis. Where we bid? 331.40?
This has been a slow, steady climb. This one, unlike the Apple and the Microsoft, which just kind of been hanging out,
big.
This just keeps going higher. I mean, this is an incredible quarter, and it's a fairly cheap company. It's a big move, big market cap company, 7.9% move. It's big.
I can't even think. I mean, mark down the pre-market high, wherever that is. Use that as a bogey. But and I'm just queuing off maybe Google yesterday, and they let it run. I mean, this is a point where the longs they're goosing it. Shorts don't know what to do. And then near the end of the day, when did Google maybe look for this pattern? Google actually peaked around 10:30. This is 15-minute chart, 10:15, 10:30. So maybe see what happens in, jot down the high and see where it goes. But I mean, right now it's bid, and all they can give you is the pre-market high. Maybe wait for some kind of iceberg or something. I don't know to come out there, but when there's
Google was similar story yesterday. Got bid, and then it did start to come off in the afternoon.
Different,
so we finally did come off in the afternoon. So, but I mean, these are good quarters. Google killed it. Facebook killed it. Apple killed it. Microsoft really did kill it too. Like I said, it was more of a victim just of reporting the exact same time at Google, and that raised bar from Google got it. But let's get Marc Chaikin's thoughts on this. I mean, so far so good for the mega caps.
Really good for the mega caps, particularly if you have a bullish power gauge rating. We were bullish on Facebook, Microsoft, and Google coming into earnings, bearish on Apple. Interestingly, Apple's banging up against our long-term trend line. So this is really good for the balance of earnings season because there's no real reason to sell stocks here. S&P climbing that upper volatility band. But I do think this is a tale of two cities in essence. You've got some of the, call them lockdown stocks that are really hurting. And when they report, they tend to disappoint. So I'm zeroing in on Pinterest and Spotify, both with bearish ratings, both under our long-term trend line when they report, and both with serious sell-offs yesterday. So I think the message is stay long the stocks with strong power gauge ratings, strong fundamentals, big sponsorship, and avoid the Zooms, the Z-scalers, the Adelazians.
And Mark, what about Teladoc too?
Yeah, that's what I was going to say. Teladoc, poster
yeah.
child.
Yeah, the Kathy Wood stocks are really getting hurt.
Arc Lady.
The Arc Wood.
That's her new name. Gil Morales renamed her yesterday. We now call her Arc Lady.
We probably find a better name than that. It's a little more derogatory, but
I mean, no, come on, guys.
Right. You're not a fan.
This show is off the rails today.
Everybody be nice.
Raz talks about bringing Trump on. Now you're making
Jesus.
Not nice people. Come on.
Interesting interview, Trump.
Yeah, but I think, as I said 2 weeks ago, don't get carried away with this strength. This was all anticipated. Great first quarter. What do you think the GDP preliminary number is going to be? 6.5, 7.2? I think it's going to blow people away. But that's rear view mirror stuff.
All right. So someone asked about a comment that Mark had made regarding the market in May, and I have a calendar alert set to remind myself to ask him at the end of May.
It's not the end of May.
It's not the end of May. So to whoever asked about Mark's thoughts, I'm assuming they haven't changed with regards to weakness into June. We'll follow up on that when in about a month. So Mark, going back to the Pinterest thing for a second, this is from the chat. So you wouldn't buy the dip on Pinterest?
Oh, I might. I just wouldn't own these. I wouldn't own these ahead of earnings because they're just. There's no way these companies. What's happening now is companies that are cash flow machines like Apple, Google, Facebook are reporting well and getting well received. Companies that are on the cusp of profitability like Pinterest, Spotify, not so fast. Fiverr. I mean, you've got a lot of names that were really on everybody's radar screen from March through now. And if you're still in them, I think you're in very stale merchandise and you don't know where the bottom is. Personally, I love the Pinterest story. The numbers were a little light because projected because their comparison. So here's what's going to happen with a lot of these companies. Q2 of 2020 was a high watermark for a lot of these companies, whether it was Zoom, Pinterest, anybody who was interacting with someone who's at home has a big bar to overcome in Q2. And that's what hurt Pinterest. They said the comparisons for the next quarter were going to be light. Well, if you didn't know that, you're not paying attention. So I go back to the FANGs because there was a blogger who is really spot on. He's sort of a retired trader, lives on an island off Florida, and has a mysterious name, the Heisenberg. And he's been saying for a year and a half that the mega caps are the utilities of the 21st century.
Yeah, I've heard. Yep.
They're the toll takers on the digital highway. And that isn't going to change. You know, some things are going to change based on lockdown and then coming out of it. But we've only got more entrenched and more in bed with the toll takers, the search engines, the social media stocks, the shopping stocks. It's not going to go away. They've basically been able to build a little bit of a moat, you know, vis-a-vis, say, brick and mortar. I mean, what percentage of people are going to go back to Bed Bath & Beyond, go back to some of the conventional brick and mortar stores where we used to shop? It's going to be online to a great extent. They won't go away. Some of them are reopening, but I just saw some kitchen equipment that I want to get from Bed Bath & Beyond. They say it's available in your local store. Well, the local store is 30 minutes away. Am I going to go, you know, do a sidewalk pickup on Bed Bath & Beyond, or am I just going to click and get?
What do you need from your kitchen, Mark? What do you need for your kitchen?
This was bizarre. It's a new lemon juicer, which apparently isn't so new. But
how about Google at these levels after this report, saying they're going to add $50 billion to their buyback? I mean, that's like okay. we're doing good. We're doing really good, and we think we're going to do better. I mean, not at these levels, but announcing. I mean, to me, I thought that was icing on the cake with that. And didn't someone else add to their Bible?
Apple did 90.
Yeah.
Yeah, I think
Yeah.
that's perhaps the biggest single story of earnings season. You've got demand that isn't going to turn into supply in the ETFs. 2 days ago, there was a $1.5 billion buy at the close on the SPY. Now, that buyer could have bought all 500 stocks as a basket, but they were willing to pay the 6 basis points premium to get instant access cleanly to the large cap space. So you've got big pent up demand continuing to come in. I think the number's 495 billion has come into equities, not all US, in the last 4 months. So you have big demand. That translates to big demand for the 6 big mega cap stocks plus Tesla. And guess what? Now they're going to be buying back their stocks. That puts back puts a floor under the stock. Remember, we didn't have buybacks in the main in 2020. So that's why I say my May prediction is just to trim stocks if they spike up, particularly if they have bearish power gauge ratings during earnings season. Raise a little bit of cash, maybe 10, max 15%, to put it to work in a dip into a June bottom. But the long-term sort of supply-demand dynamics for the stock market remain incredibly strong.
And if I can
that seemed to silence everybody. Come on.
Well,
if I
can go back to like the tech thing for a second, this is sort of why we were so bewildered for 6 months or whatever it was when these FANG stocks really didn't participate and grow. I mean, a couple like the growth sector went to the moon and then came crashing down, but Apple didn't do a whole lot for 6 months. Facebook, Google, Google's different, but
Facebook and Google were a little bit different. Google had the gap and go after the last report, it held, and Facebook's just been strong too. So,
but Amazon, Microsoft, Apple, didn't really do a whole lot, and this is why it was
they held steady, and that's what we talked about. If those stocks started to catch on fire, what was going to happen in the market? And that's exactly what's happening. These stocks, I mean, it's just if you were bullish and you were kind of bullish, now you just have to be like super uber bullish with that. The big boys now are starting to catch up. And Mark, Amazon splitting. I mean, is that like? Do you stay awake at night thinking about whether or not Amazon's going to split their stock?
I do not, but especially since you can buy fractional shares at all the brokerage firms, it really is meaningless. But that seems to catch the headlines, and don't know what that means practically speaking. I do know that you've got these stocks that people now own. I mean, not a lot of people own Google, the small traders, but they own them through fractional shares at Robinhood and the other brokerage firms now.
Sure.
So they can play this with small amounts of money, and that doesn't add up to a lot of demand compared to the institutions, but it doesn't hurt. So I think the intermediate to long-term dynamics are still very strong. The Fed is not going to be a party pooper and shut down, the spigot anytime soon. So where does all this money go? And the message I would leave you with, even though I'm saying there is going to be a bit of a pullback, is we've had rolling corrections. We had the rolling correction out of growth into value. We've totally corrected the EV market. And nobody talks about them anymore, NEO and these other stocks. You totally corrected the SPAC market. You haven't corrected the $2 billion delicatessen yet, but you may.
You've heard about that, Dennis?
I haven't looked at that for a week or so.
Oh, it went from $100 million joke to a $2 billion joke because they issued all these immediately exercisable warrants at a penny.
Oh, great.
To the sponsors in Europe.
What's the symbol on that?
Oh, I don't know. It's something international, something HI.
Yeah.
But the point is, we've really compressed a lot of the froth out of the market, and that's why you don't see a lot of people talking about a bubble anymore. Because where there was bubble activity, it's been deflated a bit. And this is
Well,
all
yeah,
helping.
we moved out of from the high valuation into the low valuation. The money was a clear move over the last month and a half, where 2 months, where we were paying nosebleed prices for growth, and now we've moved into a value type market. And this is stuck. We've seen rotations like this over the last year that stick for 5-6 days. This has been a couple months now where value has started to outperform. So you just wonder if it's a longer term thing. What are your thoughts on that? Just that this could become a more value oriented market. I mean, Facebook is kind of a value stock too. That's having a great day today.
Well, I think reopening equates to value. New York State announced today they're totally reopening. I think it's in the middle of June, and cruise lines, according to the CDC, can now start booking as of, I guess, July or August. As you go into a reopening phase, value is going to be on people's minds. You don't need Microsoft, Apple, Google, Facebook. You don't need the toll takers if the economy is expanding and potentially overheating. So yes, I think there will be a rotation of value, and I think small caps are going to catch a bid again. They're starting to look like they're going to break out of that rising wedge formation. And I've noticed that a lot of small cap stocks that I follow have reported better than expected earnings. Analysts had pulled back their expectations on stocks like MarineMax, HZO, which I own. And suddenly they come in with a blowout quarter. People are still buying boats. So selectively, small caps have been doing extremely well, and they tend not to sell off after earnings because A, they don't have a lot of following from the analyst community, and B, people pared back their expectations. So I think there's plenty of opportunity across the board, but right now, with the big stocks having made their move, I'd be looking at value names again, infrastructure names, and some of the small cap stocks that have good stories.
Marc Chaikin is the founder of Chaikin Analytics. If you have not checked out the platform, I highly recommend you do so. Marc joins every other Thursday. Thanks a lot, man.
Be well, guys.
All right.
Thank you.
I'll look for the Donald.
Oh, please. Don't. Thank you. You had to go ahead.
We upset half the people are really saying like it's half the people are upset.
Everyone is upset. Okay. Can we talk about Ford, please? Because this was interesting here. So the actual numbers for last quarter were good. Mm-hmm. But the forward-looking stuff is not great. Why? It all comes down to that shortage of chips, right? Yeah. So Ford said, I'll give you the numbers for whatever they're worth. Their EPS, huge beat for Q1. Sales also beat nicely. But they are going to produce 50% less cars in this quarter, Q2, due to the fire at that plant in Japan that supplies like 2/3 of the world's of the global automobile chips, right? So they're going to make half the amount of cars they wanted to for this quarter, and all told, they said that they're going to make 1.1 million fewer vehicles this year than they planned on, all because of this fire at this factory in Japan in March.
I mean, this is a supply problem, not a demand problem. And I still think you're going to see a lot of demand going forward. That's why Ford remains one of my long-term holdings. I think on a pullback down into the low 11s, I think I might actually add to the winner. I never add to winners. I actually might add to this position if it gets down to the low 11s. I think you got good support.
Yeah,
I do think you've got a good story going forward here. The valuation is very reasonable. Especially, I've always liked GM, but I own them both, Ford and GM. I own Toyota now. I own Honda. I own a lot of the traditional automakers because the valuations are reasonable. I think you're going to have a move to electric. I mean, everybody's all over Volkswagen. The reason I don't own that one is because it's run too far. Also has 5 symbols over here, and I hate owning 5 symbol stocks. But I just think the traditional automakers eventually do get a huge lift from EV. This isn't a short-term trade. But I do think short term, I think $11 gives you great support.
Yeah, and you can see those lows. I mean, someone's stepping up a little bit here, 11.90. That's where you spike down to, and they're just being patient, trying to accumulate the stock. Dennis is referring to some lows. Yeah, like 3 lows in the 11 quarter, 11 half area. Let's see if I don't think it's going to get that low today. This is a pretty thick stock. On a rebound, oh boy, it's going to be a while. 12.39. If you get some sudden spike up, that would be the bottom of the range from yesterday. And I know I'm not going to get a lot of love for this, but I just think there's going to be less cars on the road.
We know you think that.
I know.
We know you.
I know. I just can't get that out of my
And
head.
that's fine. You can know none of the automakers, and that's fine too. I disagree, so that's why I own some automakers.
There's not going to be more cars on the road. Like some of these kids coming up now, like when you were like getting your driver's license, right? I mean, well, my dad let me drive about a year before I had my driver's license, but anyway, I mean, it was like so. And now, I have I have a nephew, and it's like, yeah, you're at home. You're not, he's doing the schooling. I don't know. I mean, it's just not as big a deal. 16, getting your. I don't think kids are gonna be getting the spanking new cars when they're 16. I think there's gonna be more electric cars, no doubt about that. But I think less cars on the road. I just can't get that out of my head. So we'll see.
For whatever it's worth, Ford dragged down GM with it. GM reports next week. If that's your bag. We did get some economic data while we had that conversation. We had jobless claims. We had the first GDP. It is the first, right? Yeah, the first GDP reading for Q1, and Q1 GDP came in at 6.4%, which was above the 6.1% estimate. So that'll be revised a couple times there, but there is your first reading on the GDP front. To go with jobless claims, didn't see a lot of movement on that. On those headlines, nonetheless. Okay. What else? You want to go to eBay? eBay is not playing ball today.
Sure.
They, I think, said something bad about gross merchandising volume, which is the amount of stuff that they sell, basically, and stuff on the platform.
That's it.
With regards to the backward-looking numbers, though, the EPS was above estimates, the sales was above estimates, the forward-looking guidance was light. That's the problem. EPS guidance missed, sales guidance I guess a little bit higher, but the earnings guidance was light.
I'd be more inclined to buy the pullback here.
But where?
I don't own it. Yeah, I know. I'm looking at that too, Joel. I'd love it down in the low 50s. I don't know if you get there, though. Like 50 to 52, you have all kinds of support down there. And you're right. You're 50, 70, it might be early. I am inclined to buy this, though, in my long-term account. I think lower 50s, but I may not get there, too. So it could just be one of those that slowly crawls back like an oracle, where it gets hit on the initial couple days, meanders, and slowly starts to climb back up. And when you look at it 3 months later, it's got all the losses back. I do think eBay is going to be the same thing. I think when we look at it 3 months from now, I think it's going to be back up over 62. It's just a matter of, can you get it cheaper, in my opinion.
Yeah, I mean, 58. I mean, you're giving back half of the move right now. Right here from this big old move in March. So I figured holding here. I mean, you do have this. I mean, you're trading at this level. There's really nothing great to lean on here between 56 and 58. But there's really this is one of these stocks too. It will give you a shot. It will. I mean, this was a spike low, and then it had a couple lows in the same area. So let it digest. Surely doesn't feel like it's done going down right now. I mean, you look at the chart, upper left chart, and it, someone still got the hammer on it. So let's see where our next daily low comes in at. If you're looking for a target, 56.96, that would be my next target on the downside. And we could be there momentarily.
Someone asked earlier about Qualcomm up this morning. Chips have been really hit or miss, I feel like, this earnings season so far. Qualcomm beat on their earnings, they beat on their sales, their guidance was also above estimates.
I mean, they hammered this on the last earnings report, didn't they? It was down.
Yes, they did.
I believe they did, and it continued to leak, and now, obviously, you get a good earnings report. I'm long Qualcomm in the long-term portfolio. This was a Sean pick, one of the few stocks that I bought back in March of 2000. Wish I would have bought a lot more back then. I'm still long it. I don't plan on selling it. I think Qualcomm's a good company going forward still.
You got a little bit of confluence here. You had that spike up to 146.24, and then you got to try and get into that gap area. I don't know. Maybe the gap down was last on earnings. Let's see. Do we have something there? No, there's nothing there. Can I find something? Yeah, 146.89 was a high too. So if you want to get back up there, the longer it takes to get back up there, you might roll over a little bit. But working its way higher, top of yesterday's range, that's way down at 138.27. I don't think you'll be seeing that today, but some overhead supply here. Maybe try and hold out for 150 over the next couple days, and then you got the gap to fill.
Yeah, and Robert Diaz is noting the AMD sell-off.
What about that? What about that sell-off yesterday, Triple D?
It was sell the rep.
Yeah.
You get down to 80. I might buy some AMD if you can get down to 80 again. You get good support 75 to 80. That was an awful candle yesterday, so I do think we caught quite a few people getting long. Can't chase, man. Again, it's a story. No. This market, it's just that story again and again and again. You've been in this market where it has not paid to chase. Paid to chase last year. Most of the stocks it has not paid to chase. You're buying the rips, like, you think about Pinterest. And everybody's, oh yeah, buy that up, back in early April. Oh yeah, Snapchat had a pretty good report. Oh yeah, it's moving up. Let's buy Pinterest, and boom, it's back. And it's back to support. So, and huge support down here at Pinterest. Kathy buying it yesterday. You know what? I somewhat agree with her. I mean, you're back at support now on Pinterest. It's interesting at these levels. But when you're buying the rips, it doesn't work out as much, it seems like, as buying the dips, at least in this market. It's more contrarian. I've always said buy the dip and sell the rip, not buy the rip and sell the dip. So that if you're buying the rip yesterday on AMD, you're getting punished for chasing it.
And the thing about this one, if someone said they got hurt on some calls on, trading this yesterday, just like open, paying attention to that open. I mean, even if you're not super aggressive, you have the 88.85 high, right? Or open. Boom. A lot of stock trades there. And you only got to 89.20. So 89.20, okay, yeah, I bought the open. I'm up 35 cents. Whoosh. When it came back down through that open, look at that. I mean, it just caught people and a big seller came in. So just I know I say it a lot, but those opening prints, those opening few minutes, very important, especially like on an earnings day, the stock opening up really high or really low.
Wait, just to clarify, Dennis, what you said there, you said you bought Qualcomm last March?
Yeah, $61. It was a stock I wanted to own forever. And I wish I bought Microsoft and Qualcomm in the long-term account back in March. There wasn't a lot of stocks that I bought in March, but I was like, Qualcomm's just got some huge value. And when it's getting hammered from $100 down to 60, it was one I got near the low. So yeah, I've had it since then. So I'm probably not going to sell that Qualcomm. It's probably in there for a while. No intentions to sell it here yet.
Nice job.
There's no intention to sell it.
A lot of stuff that I obviously didn't buy, and I had too much cash back then. So you can say nice job, and everybody on Twitter will always point out all their winners. I'll tell you, I did a lot of good things in February selling stocks. I did a lot of bad things in March and April not buying stocks.
But that was one.
So that was not, obviously one of my better calls to stay, bearish the market for too long. I didn't get bullish until, we know like June. Thank goodness I did. And I started adding stocks, realizing that, hey, they are going to continue to buy this market. And obviously, I wish I would have bought more.
All right, 8:41 here. If you weren't listening at the top of the show, my goal today is 1,000 likes. If we get to that goal, then we'll have a special show tomorrow afternoon. If we can't get to that goal, then the special show is in jeopardy. So 1,000 likes is the goal for the day. That's about half of our live viewers. Let's see if we can get there by the end of today's broadcast at around 9:15, give or take a few minutes.
Can we go back to Amazon? Because we talked briefly with Marc about it, but Joel asked the question. I mean, to split or not to split, that is the question of the day. And it's not, I think we're at a point on Amazon where the earnings aren't even going to matter as much as everybody's looking, because Gasparino's put it out there. Is this company going to split their stock? And if they announce a split, it's going to rip. And if they don't announce a split, I think it gets hit. Even on a good report, if they say nothing about a split, I think the stock could get hit on that. So it's disappointing that now it's come down to that, because I don't think they're going to announce a stock split.
Why do you think that, Dennis? Why do you think that?
Because everybody's talking about it. It's all over social media. I mean, and now it's built into the price a little bit. You've had a run up in Amazon price. You had the big run up 3 days ago, and Gasparino tweeted that. It got 100 points tacked onto it. It's continued to run up since. Obviously, we've had a couple good tech reports that have helped it as well. But it's built in now that people are like, oh, it might split. Oh, it might split. They might announce a split. So you got shorts covering anybody who's short the stock, probably prior to the report. And you got people buying it ahead of the report, anticipating that it might split. It's up another $43 here today. So you've had basically a 200-point run here in anticipation that they might announce a stock split. If they don't announce a stock split, I do think it gets hit. So just because it's all built into it, I don't think they're going to do it either. I don't know whose Gasparino's sources are on this. So it doesn't make sense. I think it does make sense. I think I think it would actually really propel the stock if they did announce a split. One, investors do like splits. Two, is you can't include Amazon in the Dow, not at $3,000 a share, because we know what the Dow is priced. The Dow is price weighted, and Amazon's daily price fluctuation would push the price of the Dow around too much. Higher price stocks have more influence, and most of the stocks are $100, $200. You can't put a $3,500 stock in the Dow, and because it would have way more influence than anything else, like 10 times more influence than a stock, or 15 times more influence than a stock like Disney. So you just can't have it in there. But if you split that thing, say 5 for 1, then all of a sudden, or even 10 for 1, then all of a sudden you could put it in the Dow. So a 2 for 1er wouldn't do it, but a 5 for 1 or above would actually get you to a point where you could add this to the Dow. And I think if the Amazon price was lower, I do believe it would get added to the Dow eventually. So that is where it could make sense for Amazon, but I don't know if they care about their share price. I don't know if Bezos cares about his share price enough to worry about, oh yeah, let's get added to the Dow.
Remember, he's not the CEO.
Okay, well that's a good point too, actually. So is he still
because he's
shots
gone
behind the scenes?
Yeah, because he's gone. They're thinking that that's going to happen.
It would propel the stock. Like, I'm going to be looking at obviously watch my Benzinga Pro, and if you see a headline that's breaking and they're going to split the stock, I think the stock price explodes. I think if it's not there, I think that it dips. It's not going to get murdered on it, but I think you could get a scenario where you have a good report, like a Microsoft. They don't announce a stock split and they hit it down.
They're going to have to blow it away. I mean, because after the
not
Google,
if they announce a stock split, Joel.
Right? Okay.
If we take the split off the table, they will really have to blow it away to go higher. I agree.
How could the street be so off on like the Google? I mean,
this is what makes it like basically impossible to short these stocks, because these companies print money. Like money is coming out of like every orifice, right? Like the money is just pouring out of them. They print money. You can't bet against them. So how could the street be wrong? Maybe it's not that they were wrong, so off. It's just that they didn't, for some whatever reason, just underestimated the growth that these companies. I mean, a lot of businesses are seeing weird comps year over year, right? We had this whole stay-at-home versus reopening trade, and these mega cap techs were both. They were a stay-at-home trade and they were a reopening trade. The businesses were both, and that sort of is transpiring right now, where they're saying, "Look, we just had like our best year ever," right? So I don't know, Joel, to answer your question, how the street could be so surprised, but shame on us, I think, for being so surprised. These companies print money.
The point Joel making, though, is everybody's going to look at what UPS did too and think that Amazon is absolutely going to blow it away. I mean, you look at UPS, that was just rocking and rolling. Obviously, UPS, being and making new highs again yesterday.
Boy, oh boy,
it's really set the high bar. The bar for Amazon, with Gasparino doing the split, with UPS blowing it away, with Google blowing it away, the bar for Amazon is super high.
Oh man,
super high. Can they get over the super high bar? I think it's only a split announcement that's going to do that, and I don't know if they're going to do the split announcement. So that's going to be the question, and that I want an answer to tonight.
It's so high of a bar that I don't even think Dwight Stones could clear it.
So would you be selling this into it, or are you too nervous that they could announce a split?
I mean, I don't care. I mean, it's still the same company. I definitely wouldn't short it. I definitely would not short it because of that thing happening, and to buy it based on that, I mean, no, I wouldn't buy it. Based
I
on
was
that.
short. Remember, I had the straddle written on the Apple, and they announced a 7-for-1 split, and I got annihilated. So
I
we can
remember.
say, oh yeah, splits are meaningless. They aren't.
They're
though,
not.
Like, fundamentally, they might be meaningless, but they aren't to the market. We saw the run up with Tesla when it announced the split, and it kept running and running and running ahead of the split. And I had the straddle short on that Apple. And it's where I've been spooked for doing straddles for a long time, and I got absolutely annihilated. I sold that straddle for like, I don't know what it was, $25, and went up 100 points on me. This was back when Apple was like 500, so I got absolutely killed on that. And that's the split that got me. So I'm scared to be. I'm long Amazon, full disclosure, in the long-term account, but I wouldn't even want to take a short bet just because of that possibility. But I do believe that there's a good chance that the stock goes down after tonight, especially if they don't announce a split.
Couldn't you see a scenario though where they announce a split, the stock pops tonight, and then tomorrow, maybe in the pre-market, it gives it back?
No,
because
everybody will start talking about, are they going to include them in the Dow now? It'll automatically go to that. It'll automatically go to that. So I think if that scenario that you outlined happens, Spencer, I will buy Amazon. I will buy it for a trade. So, and I think there's a lot of other people that would do that same thing because it's naturally going to think. And when stocks get added to the Dow, they do go up substantially. I mean, let's look back to the recent ads. CRM. What was the move when CRM got added? Do we have the headline, like the date?
Good
I'm
question.
assuming it was last year.
December.
Was it in August when you had that huge candle?
Let me get the exact.
See if you can grab it.
Yeah,
when they get added, some stocks get added to the S&P. We've talked about this before. They can actually go down because they may have been a higher
was it
weight.
November?
They were a higher weight in where the index S&P index are coming from.
It was August 31st. It was
August. And look at the candle, August. Look at that August candle in CRM. So there you go. Just an explosion back then in price. That wasn't added to the Dow. So if you can show it there, you can see it. I can see it. It's the biggest candle that jumps on the chart. That's why I was looking at the chart and I was like, I bet you it was August because you can see the explosion.
I know you can see the news on the chart. All right, let's ramble. I mean, the spoos are just grinding higher here. We just hit 0850. And boy, I mean, we haven't had that much of a range. We've only had a 25-point range. And our average daily range is closer to 40. So if you want a target on the upside, 42, 22.50. I mean, that's a potential target. That's a few. But let's rip through some. We got some more earnings, right? We had a lot of other ones besides FANG. So what do you want to do? Let's do it.
We can start ripping here. You want to go to like let's do.
Is anything down? First of all,
yeah.
Any stock down?
Yes, we talked eBay. We talked Teladoc briefly. Those are both down. What about like MGM? How's that doing this morning?
I was going to say, if you wanted to go one that's down, Joel, before you go to MGM, ServiceNow.
Oh, yeah. Okay, let's go there.
Now is getting the beats.
Yes. They were getting punished. Their earnings were fine. They gave some very light guidance, though. They also said they're going to do a mixed securities shelf offering, but they didn't say the size. But their guidance was light.
What a nice run this had in the last 3 weeks. And when they don't make the new highs, which it's apparent it's not going to now, that is very concerning. This candle is going to crush anybody who bought it in the last month.
This could be some
You now have bag holder central in here again from anybody who's bought this. And you have people who bought this in March, just saw half of their gains get annihilated in one print. So I think as you see, if you can, this is a stock I would not buy the dip on. I'm more inclined to buy the dip on a Pinterest or more inclined to buy the dip on, what one was I saying earlier? I can't remember now. eBay. But ServiceNow, they're in the middle of nowhere for one thing. And the second thing, you can have a 50% fib, which Joel's probably going to point out. But I just think as you get rallies, you have people caught in this now. So I'd be a seller of rallies in ServiceNow.
What's the what kind of volumes traded too in this?
It traded pretty good actively last night, so it's pricing now. I don't think it's bouncing back. I don't think we're going to see a scenario here where ServiceNow is trading at 560. Later today, it's kind of done what it wants to do. You'll see that crazy purple candle. Remember, that's probably an 8 o'clock print, or I don't know
that's
what that
bad.
was.
Yeah,
that's a bad print. It hasn't had any rally at all, really. It's been leaking. It's off the lows, but man,
Wow, it's hard. I
some
mean,
pain.
not much traded at the pre-market. This is one where there's sellers out there, and they're not showing their offers. They're just waiting for bids. You know what I mean? Because you don't want to show is there a bid offer out there right now, Dennis? Probably 100 up, right?
It's you're fairly wide. 523 to 520, 524, 26. These $500 stocks are always 100 up.
Yeah, that's pre-market low 516. I mean, you just look at this whole area here from 5 to 520. I think maybe find a home in there today over the next couple. That would be like a best case scenario. 510 was your low right here. So with a high price stock like this, you just can't say, oh, if I'm 520 bid for 5,000, I'm in, I'm taking it. What you're going to do in this stock is they're just going to small lot it to death and be patient and let it bring in. Also, if you short this thing, maybe, I don't even know. You can't even tell mop-up prints anymore, but sure looks like it's got more work to do on the downside. I'd be looking 510, 520. Maybe today you find it's a wide range, but it's a $500 stock.
All right, Craig dropped us a fiver.
A fiver?
About Boeing, which we did not even discuss at all yesterday.
Did not discuss.
They had earnings yesterday morning. The EPS was lower than estimates. Sales was higher. So they delivered 77 aircrafts last quarter, up from 50 in the prior year. They also said they expect a return to 2019 passenger traffic levels in 2023 or 2024.
That's just a guess.
That's
just BS guess.
That's a
They
guess.
don't know any of that. That's just a BS guess that's trying to give the market something to hope for. A couple years we'll get back to normal. That's just throwing it.
You know what? I disagree. I think that
you think they actually did projections to figure all that out?
Yeah, I think right now, and I mean, I know I said there's going to be less cars on the road, but I think there's going to be more, car travel. People that are going to be, seeing Great Northern Michigan and different places like that. I mean, I think it's going to take a long time to get back. As far as looking at this stock here, did get hit yesterday. I think you want to find a home here above 230 and put some, you had a couple lows right at 230, just above there. This is the base. So I could see a trend, if you're long term, you think this is the pullback, then you really don't want to see it breach 230 and big. But it held it yesterday.
Big level.
A little bit today. That's a big level. And look at this.
I'm inclined to kind of buy the dip on it.
I don't know. They always seem to have some kind of problems.
I sold the Boeing. I got nervous that everything started to roll. I bought it around 230, and then I sold it about the same. Actually, I bought it around 220, and I sold it.
You bought it lower, I thought.
Yeah, I made like $10 on it, but then I had the big run afterwards. I was like, why did I sell that? And I got spooked, and now it's back to where I sold it. And you know what? You did have some support here at 230 before. I think 230 is an enormous number. So I think if you're buying at 237, you stop yourself at like 229, 228, maybe a little lower so you don't get the undercut and rally trick. But, risk yourself 4 or 5%. I think eventually Boeing could catch a flight again here. I think it could. With the reopening trade, you look at the airlines. I mean, they all pulled back substantially too, and they've kind of bounced off the lows. The biggest question is, where is COVID going? I mean, that's what matters with all these stocks, because we know, everybody, it seems like in the U.S. has forgotten about it now. And then, obviously the U.S. is doing very well with it, but we know it's a major problem in India. Canada's not having a good time at all right now. We're back.
Yeah, what's going to go on? What's going on there in Canada?
No vaccines. We have no vaccines. You have a lot of vaccines. We can't get.
Why,
I'm on the list, Joel. I'm on the list too.
Man, Dennis, can you sneak over here? I can get you one.
I know, but this is the problem. Even our hockey teams aren't vaccinated. It's difficult to get a vaccine in Canada. I'm on the list. Me and my wife.
Wow.
Yeah, because the prime minister screwed it all up.
It must be serious if the hockey teams can't get back, because they're the first in line. So
they should be. I've said that they should be the first in line. People get mad at me and say, "Oh, why should the hockey players?" You know why? Because right now, Ontario is in a lockdown, and we're sitting at home here with nothing to do. We like watching hockey. Give us some entertainment. Vaccinate the bloody players and the coaches. It's not that many vaccines. And then we don't have to have Vancouver Canucks take 3 weeks off. I mean, if you're going to lock me down in my house and tell me I can't go anywhere, Well, at least give me something to watch on TV.
At least give me hockey.
Yeah, give me hockey. Like I got my beer in the fridge, but I want my hockey games on. And in Vancouver, I'd take 3 weeks off because the whole bloody team got it. So, I mean, I think they should have been vaccinated right away because you know what? It's keeping us sane watching stuff. You want to lock people down, it makes you mental health is not good. A lot of people in Canada like watching a hockey game. Although sometimes the hockey games make me insane too.
Hey, can we just talk about MasterCard here? Because Visa went up after its report. MasterCard came out with good numbers, and they are up. But actually, no, they're down now this morning from yesterday, from the close. They were up.
Step down seller. Someone wants out. Every bracket, they're like, we're coming down. We're coming down off 400. We're coming down off 398. We're coming off 396. Step down seller.
Expectations too high. I mean, the stock is run. Talking completely against my book. I still have MasterCard, not selling any MasterCard. But, I mean, it's run. It made new all-time highs yesterday ahead of the print. So it's run up. Expectations a little bit too high. It's cooling off a bit. Does this mean MasterCard's story is over? I don't think so. We're still buying everything on plastic. So I think, MasterCard, Visa are fine long-term. That's why I stick with MasterCard. But his expectations were simply too high.
375. I mean, I know people don't want to hear that. Keep an eye on your pre-market low, as always, and see if you get follow through from that. I mean, there's just a lot of levels here. I mean, if you want to throw bids out there, maybe first time at 87.10, 387.10 was a low. That even seems kind of, but still, like something just tells me like this 375 here. Maybe if you want to be patient, maybe figure a retracement off this move. Oh, 350 to 400. That comes in three. Can't get 375 out of my mind. Don't know if it's going to work today, but that looks like an area I wants to head to.
All right, a couple of programming notes. After this, we're going to have live trading with David Green. I know yesterday I said he couldn't do today, but he is doing today. And also, no get technical today. Neil Hamilton got the Fauci ouchie, and he's feeling the effects of that. So
Fauci ouchie, that's a new one.
Really?
Yeah,
he got vaccinated and he's not feeling good.
He got number 2, which is the one where with
oh yeah, a couple other people.
So,
all right, Spencer.
How did you do, Joel? Did you get sick at all from number 2?
No, not at
you
all.
were good. You were good with
Yep.
both. You Pfizer shot?
Yep.
The Pfizer shot.
Yep.
And what about you, Spencer? You got your first one, right? Did you get both or just the first one?
I got the J&J, man. So other than
you one shot.
Other than
one shot wonder.
My blood is feeling a little bit thicker than usual. I feel fine. And honestly, no. But this was my logic, which was like I'm from New Jersey. J&J's in New Jersey. If it kills me, a Jersey made product killed me, and that's the way I'm.
I'd love to get the J&J.
That's the way I want to go anyway. So
Lisa
people
wanted
are
you
saying
to get
a lot of people. So what's happened in Canada is we weren't even vaccinating under 65 until 2 weeks ago. We just started vaccinating people under 65. It's almost all AstraZeneca because that's all we don't have the Johnson & Johnson shot at all. I don't believe yet. The Pfizer shot, some people are getting the Pfizer shot, but the majority of it is AstraZeneca. My parents got the AstraZeneca shot, but most people in Canada only have one shot so far because we're so low on vaccinations that we haven't even been giving the second shot, which actually reduces the effectiveness of it too. Canada is just a shit show for the vaccines. They screwed it all up.
Lisa wanted you to get the J&J because of your asthma.
Oh, the allergies and the
asthma. Yeah,
because
of potential. But Spencer, I know we didn't get to the likes.
Well, we're not there yet, but we have time.
No, I want to be on while you give the announcement.
Oh, okay. So the special show that we have planned for tomorrow, and I want to bring Peter on in a second. You all know Joel loves the ponies, right? You know that if you listen to our show for a few years. The plan is to do a special show tomorrow afternoon, just Joel previewing the Derby, giving his picks. If that's your bag, check it out. It's going to be at 4:00.
Derby show.
And Spencer is going to do it, and I'm excited to do it with Spencer. He's a sports guy, and he knows. But I'll tell you right now, I don't know if I'm going to give you the winner for the race. Okay,
hedging his bets already.
Well, that's what we only want is the winner.
I know. That's what everyone wants, right? But I'm going to give you an education in horse racing that you will not get on any media platform, and you'll know what it's like to be in my shoes.
Okay.
Watch the race through my eyes. Because
Okay.
when I do this handicapping and stuff, yeah, I look at the horses and everything, but I go through my mind, how is the race going to go? Who's going to leave the gate? Who's going to have to fight to get position? So Spencer is going to help me out. It'll be fun. Right now, my horse is not the favorite, which is good. So we're going to do that. We'll do that at 4 o'clock. And I'm looking for, I'm doing my article. My article is almost done. I'm excited about it. So that's the big surprise. Okay. I know you got to hop. I got to hop. Everyone have a good day.
I want to bring on the Einstein of Wall Street, Peter Tuchman from Wall Street Global Trading Academy from the floor of the exchange is back. Peter, good morning.
Hey B, how you doing?
Good. How you doing? How is the mood out there this morning?
You know what? The mood is pretty positive. Spiders are up pretty big. I think I wanted to talk a little bit about sort of as a cautionary tale about what it's like trading these days where the Fed stuff comes out. We can minute because yesterday was a roller coaster from a day trading point of view. It was a bit ruthless as we saw these moves up and down pretty radically. But for today, market looks solid. We got an IPO. The team is outside, one of the first new IPOs in the COVID world where more of a larger team is showing up. So it's starting to feel a little more like normalcy.
Yeah, the Endeavor IPOs today, right? So talk to us about yesterday. Talk to us about like what it's like to be on the floor during a Fed announcement and what you see through that.
Cool. So look, you've got back in the old days where we were more in open outcry trading, you'd be in the midst of the crowd, and the moves that we've seen over the years are quite radical on Fed Day. Okay. So you've got the days where they actually make the announcement, then you've got the news conference. So you're always at risk from a day trading point of view of these huge volatile moves. Yesterday was no different than any of it. Apparently, historically, and I read this morning in Arthur Cashin's notes that there is a bit of a lift usually in the days going up to a Fed announcement. 80% of the time, historically, we do see a move up. That has not been the case in the last couple of days. But as the announcement came out, of course, the announcement comes out at 2 o'clock about whether they're going to keep the rates the same. And yesterday that did happen. That was a huge bullish bet. The move was pretty radical. As we know in this world, you've got algos that read the information, and you could see the way the S&P graph spiked up incredibly fast and furiously, that it was not only people reading the news, but it was an algorithm definitely buying the spiders on what seemed to be a bullish bet. As that being said, it was fast, it was furious, it moved super high, it was over 10 handles in literally moments. And then you saw what usually happens as the information is assimilated by the community and sort of humans start to watch it and analyze it. Then you start seeing moves. I mean, you'll see that massive move up. Then it's sort of tampered down a little bit. And then it's kind of over the day, we saw these spikes and these sell-offs depending on at 2:30. Chairman Powell comes on. That was once again a bit of after a drift down after the initial spike. We saw him start to talk at 2:30. And then you've got about an hour, and he's a big talker. It was once again a bullish play as he talked about that the tools that they're using have had a positive effect on the market, that employment, though far from full, is sort of heading in the right direction, that there are not going to, that they're going to continue buying bonds and have a positive $120 billion a month buyback. And that those were all positive bullish bets that the economy is not as bad as it could have been within the COVID space. And that sort of created these, once again, spikes. But once again, we did see drift down as his speech started to wind down. We saw him sort of tamper his positive bullish talk and say, yeah, you know what, though? We are going to still monitor the economy. We are going to still monitor unemployment. We are going to see how companies are on the reopen. And the market tended to drift down again. And then once again, we saw a huge spike up again as the conversation kept going forward when he said we are nowhere close to changing interest rates, and that the what was the last thing he said that was fascinating?
He said inflation is transitory is what he said.
He talked about the tapering, that we're nowhere near deciding on a taper. And then once again, the market spiked up. So net, it was a bullish play. There were huge moves. It was a bit of a seesaw. And so what my point as a cautionary tale is if you were taking his talk and the fact that interest rates were going to stay as a bullish bet, and stayed in that trade, you did get hurt by the end of the day.
But as you said, though, all those spikes that I have up on the chart there, those are all algo driven. So, how can people actually trade this event?
So in my opinion, what I tend to do in telling the people that I'm working with, because not only that, as you know, we've talked the last couple of times we talked, that my trade is from 2 o'clock to 4 o'clock. Right. I tend to sort of take a little bit of a backstage on these days, because as you can see, if you're trading intraday from 2 o'clock to 4 o'clock on Fed days, right, and you trade off of things other than the speech and his narrative, you can get blown up, because as you see, a 10 handle move on the upside and downside can be painful if you're a trader. So I basically take a back door to it. I wait till the end of the day and try and make a late play. Otherwise, or you can play the momentum, but you've got to really be able to, ring the cash register and get in and out as quickly as you can as the trade unfolds.
Peter, what is your reaction to some of these earnings? The big tech companies are just blowing it out of the water, whether it's Apple, whether it's Google, Facebook. We have Amazon tonight. What's your read on that?
So you know what? I think, once again, a cautionary tale, and I think David Green will pick this up as we talk with him later, and we'll bring him on the show, is that David is a firm believer, and I really follow suit on this, that in this new world we're trading here, that trading pre-earnings declaration can be dangerous. Even you guys talked about it before I came on, that these moves are sort of fast and furious. Maybe there's sort of irrational exuberance. Maybe they're overbought. But what David Green believes, and I sort of have been taking the new posture, is that it's more important to wait till the earnings come out, because there's so many players in the game. There's so many option plays against it. There's so many results and expectations that are built into it. And the trade is so crowded that if you wait till the earnings come out and you let the price action define what part of the trade, this is not from an investment point of view, it's from a day trading point of view. You let the price action determine how you're going to play this. I think it's a safer bet. The earnings have been strong. The earnings are incredible. Look where we're coming from. The world is reopening. So from an investment point of view, that is all positive. And I think they've shown incredibly strong earnings and things are good. But like Microsoft yesterday, they beat and the stock retraced quite significantly. So we don't know what everyone's action is into the earnings, right? There are people who play it big on the option side, on the equity side. And yet we'll see companies come out with good earnings and sell off. Companies come out with bad earnings and trade up. We saw it on the last quarter with Apple, posted incredible earnings and did nothing but sell off. So I think that's the cautionary tale. If you're a day trader, is to let the earnings come out, watch the price action for a moment, and then really look for the technicals to decide how to trade them on a daily basis.
You mentioned your partner, David. I want to bring David on here for a second and just get his thoughts this morning. David Green, I know you're not trading, or maybe you are trading a little bit of this morning. How are we doing, and what's on your radar here right now?
Yeah, no, we have not made any trends yet. On days like this, it's always good to wait until things open up. Okay. I mean, obviously, Facebook is going to be a main focus for us today. It's starting to come in a little bit now, down about $3 from its high. We got some bids out there, which we'll get to when we get to my live in about 6 minutes. But as Peter said, okay, again, I'm a trader, right? I will never buy or sell a stock before the earnings come out. Maybe we'll do a little option thing. That's it. But I'm not. It's all about price action. It doesn't matter how good the numbers are. Nothing matters in a stock. It doesn't matter if they beat by $5 or whatever. The only thing that matters in a stock is price action, especially for a trader. I mean, look at AMD yesterday. That was a perfect example, right? Earnings were spectacular. The stock traded up to $90 yesterday, and then spent the rest of the day just going straight down. Yeah. So when you read an earnings report, especially as a trader, it does not mean anything. All I care about is price action. And if you look, I don't have it up, but we'll look at it a little bit. Spence, when this thing broke, you can almost see a little head and shoulders there. When it broke like $89, that was a great signal to get short this stock. And it spent the rest of the day going down. So we are not running into, look, everybody's been with me all this week watching us trade, right? Unless something really crazy happens off the opening, we're not running into anything. We're patient and disciplined. And usually we get trades within the first 3 minutes anyway. But for, we're talking about trading, right? I own Apple. I own a lot of stocks long term. I don't even look at what they do day to day. That's your long term portfolio. I don't even look. I don't care. But as a trader, this is the best time of the year for us. When earnings come out, we talked about it yesterday, Spence. There's 4 times. The best trade that we could have is a trend trade. And when stocks earnings come out and they're good, they stay good usually. And when they're bad, they stay bad. So I just want to be on the same side of the trade. That's it.
That's it. All right. David Green is going to hop on over. He's going to hop out of here. He will be in our next stream starting up whenever I'm done.
Good to see you.
You too, Peter.
All right. Peter and David, both at Wall Street Global Trading Academy. David, we'll see you in a few minutes. Peter, before we wrap with you, any just final thoughts heading into the Open today? Whether it's like a feeling down there on the floor that you're having, or any big catalyst you're watching today. We obviously have big earnings out for the close and Microsoft and Neo and Twitter, but what's on your radar for the day? What's like sort of the big thing you're watching for?
So look, what I'm watching is the S&P 500, right? We're up 29 handles this morning. For me, as David said, what's going on, if I were to gauge what the market was doing off of individual stocks and projecting their earnings, that is a very crowded trade. That's like guys who come on with us and David, and they've got 900 pivot points and 30 different graphs plugged into their technical analysis, and they're sitting there looking cross-eyed going, this doesn't work. I try and keep it simple, especially in complicated days. I like the market to tell me what it thinks of what's going on, and obviously today it's a positive day. But we have seen, for me, right now, I did look at the market opening on open orders, and there is not enough to sustain an up 29 handle opening on the S&P. So I may be a short fader on the opening here for a quick trade. That is something you and I talked about. You asked me, what do I do on the opening? You've got the spiders up 29 handles pre-market, right? You've got a lot of earnings coming out, a lot of cross currents. We've got an IPO here. Is the amount to buy on the floor of the stock exchange, volume-wise, buy orders versus sell orders, volume trades, enough to sustain that kind of an opening? Not for me for a short-term play. Net, do I feel like the market is sort of in a bit of a rotation? I really believe there's bullish sentiment all around. As this reopening story, the mayor just said this morning that New York City will be in a complete reopen phase by July. So there's a lot of enthusiasm, and it's not irrational enthusiasm. I kind of feel I kind of feel that people are feeling, I did walk down the streets last night here in New York, what felt like a ghost town as short as 1 or 2 weeks ago. Everyone was out. People were, sort of half mask, half not, out in restaurants and stuff like that. So my sentiment here on the floor and in New York City is that people are feeling like we're one stage further to getting our life back. And I feel like the market feels that way too. It was the first 100 days of Joe Biden. He did have his speech yesterday. Obviously, there's a lot of stimulus on the menu, a lot of infrastructure plays. And I think some of the more beaten up stocks are going to get some traction and go farther. You guys talked before I came on about the travel space, and I'm not sure when that's going to reopen or when that's going to be comfortable or will be really. Obviously, there are 1 million people traveling on a daily basis at this point, but when will it become profitable once again? I'm not clear about that. But I feel enthusiasm. I see a positive market coming in here. Not necessarily that we may open, fade, and go down the rest of the day. I'm not clear. I think there are going to be cross currents once the market opens. For me, there's a quick short play on this opening around where it is. I would cover closely after that, and then I would watch the day. As we described with David, price action will determine what the rest of the day looks like. Cross currents, lots of earnings, sort of a net bullish play so far.
All right, Peter Tuchman is from Wall Street Global Trading Academy. The link is up on the screen. Currently 20% off for Benzinga people. Peter, thanks a lot. Head back down the floor. We'll talk to you later.
Okay, good luck, guys.
Right.
Good to see you.
Good luck at the Open. All right, couple things that we did not have time to cover today that I would have liked to. I mentioned at the top of the show, we did have a merger, an all-stock merger this morning in the REIT space. Realty Income, which is one of my favorite tickers, ticker O, is entering an all-stock merger with VEREIT, which is ticker VER. The ratio, if you're trading this sort of thing, the ratio, you can see it here in the Benzinga Pro, in the press release, ratio is 0.705 shares. So owners of VER will receive 0.705 shares of Realty Income stock for every share of VER that they own. So there's your arbitrage ratio. You can see here's a one day chart of Realty Income, so you can see no real trades. Actually, no, you do see trading there up in the pre-market session. VER is going to be the same story, up in regards to that merger. Couple biotechs I wanted to get to. Cara Therapeutics had some news overnight. It is your big loser of the day. You can see the headline there in the Benzinga Pro. Their phase 2 study for their drug for atopic dermatitis with moderate to severe pruritus did not meet its primary endpoint. So there is your big loser of the morning. CARA. GRTX was your big gainer of the morning. Galera Therapeutics, they had some positive data out. So that one is gapping up here in the pre-market session. This is a one overnight chart there. So wanted to cover those real fast. Didn't even talk about Kathy at all. Would have liked to here. Let's just see what Kathy bought and sold yesterday. Whoops. I just go into the news feed. I search for Kathy. I literally search the word Kathy. I go to the first article, the first thing, and here's what I got. I got a list of all her buys and sells from Wednesday. Bought a lot of Tesla. On that earnings. I don't know what you want to call that. Earnings dip. I guess you can call it an earnings dip, right? Yeah. She bought a lot of Spotify, bought a lot of Shopify, bought some JD, bought Pinterest ahead of the report. Interesting. Sold some Square yesterday. Don't see a lot of interesting sells. She's so active, man. It's impossible to keep up with her and what she's doing. So there you are, a list of the ARK Invest buys and sells from yesterday. This is all straight in the Benzinga Pro. If you want a free 2-week trial, check out the promo code that's up on the screen. YouTube20 will get you 20% off your Benzinga Pro subscription. Or just go to pro.benzinga.com and get a free 2-week trial. Okay, this show is always available as a podcast. In fact, all of our shows are available as a podcast on all the major podcast platforms, iTunes, SoundCloud, Spotify, etc., etc., etc. Please remember, all the information from our show and all of our shows, in fact, are meant to be used as informational purposes, not for investing or trading advice. Let's see where we're at on the likes front. We're just shy of 800. Can we get to 1,000 likes by the end of my stream here? On a programming note for the day, so I mentioned we've got live trading coming up next with David Green. We've got, so that's going to go until about 10:30, give or take, whenever David Green wants to wrap it up. SPACs Attack at 11. Power Hour from noon to 1. We trimmed it to noon to 1. Normally, we'd have Get Technical at 1 o'clock today, but I mentioned Neil is feeling the effects of that second shot, so we'll figure it out for 1 o'clock. We'll have something. I don't know what, but we'll figure it out. We've got the BZ Crypto Show at 2 o'clock. We've got the At the Close show. I'm going to run from 3 to 4. Cannabis Hour, 4 to 5. Technically Options with Brad Weber, 5 to 6. Money Mitch from 6 to 7. That's going to be the schedule for the day right here on Benzinga. If you have not already, check out Benzinga Clips. It is our highlights channel. You can find it by going to what I'll do is I'll just pull it up. It's right there on the main Benzinga channel. You just go to youtube.com/Benzinga. You bring it up. Here it is on the screen. You go to the channel. There it is. You scroll down. There it is. Benzinga Clips right there. Check it out. We're posting highlights of all of our shows. Okay. I think that is a wrap for me. Did I get to all my housekeeping items? I did. Yes. Clips, like button. Are we at 1,000 likes yet? Nah, 816, almost. You know what I'm going to do? We have all these beautiful ads that we made, and I don't air them enough. So let me do that right now. I would like to, if I can, air a commercial for how about this? We have this brand new FDA page that Luke Jacoby carried through the finish line, and it's got FDA data, drug data. Here's some information about that. All right, I've just been informed we're doing Power Hour from 12 to 2 today to make up for Neil being sick. So you got 2 hours of Luke and Jason, as you are used to. All right, that's going to be it for me. David Green starting right now, or not right now, in a couple of minutes here. This stream is going to redirect directly to that. You shouldn't have to do anything. It'll redirect straight to David Green. All right, I'm done. Everyone smash the like. Where are we at now? We're at 826. Smash the like, get to 900. I'll see you guys later. Good luck at the Open. I'll be watching David Green along with you.